If you want to save money on your medical or daycare expenses, then you may want to consider participating in an FSA and/or a DCA. Your employer offers both of these plans through what the IRS calls a Section 125 Cafeteria plan. This means that if you participate in a governmentally allowed plan, you do not have to pay federal, FICA, and in some states, state income taxes on qualified expenses. Therefore, you can generally save between 20 to 40% of your medical and daycare expenses, up to certain limits, because you are allowed to exclude these amounts from your income when reporting your taxes. We're going to spend the next few minutes going into detail about each of the two plans, and we will then summarize the important items at the end of this video. Let's begin with the Medical Flexible Spending Account. The Medical FSA allows you to not pay taxes on qualified out-of-pocket medical expenses for you, your spouse, and your dependents up to age 26, even if they aren't on your insurance. The list of qualified expenses is long and includes copays, deductibles, coinsurance, contacts, glasses, dental, orthodontics, and prescriptions, among many others. Let's pretend you choose an FSA annual amount of $2,000, are in the 22% federal tax bracket, and live in Pennsylvania. If you spend all $2,000 on qualified expenses, you will have saved $655 just by participating in the FSA. The timeline for participating in an FSA looks like this. Before the beginning of the plan year, you decide how much you would like to contribute to the FSA for the entire year. The IRS maximum for 2019 is $2,700. To help make this decision, you will receive an enrollment packet with educational materials. Also, feel free to watch our educational videos on the Beneflex-Erie website. An important thing to remember is that the annual election cannot be changed once the plan year has started, unless there has been a qualified life event, such as marriage, divorce, or the birth of a child. Once you fill out the enrollment form provided to you by your HR department, we at Beneflex-Erie will set you up in our system. On the first day of the plan year, your employer will make your entire annual election available to you to spend on qualified expenses. It's almost like an interest-free loan for the year from your employer, which can be very helpful if you have a large expense at the beginning of the plan year, such as laser eye surgery or braces for your child. In each of your paychecks throughout the year, your employer will deduct a portion of your annual election. This is your way of paying back your employer for providing you with your annual election at the beginning of the year. This is also how you don't pay taxes on your FSA funds, since the amount in your FSA is excluded from your wages on your paycheck. There are two ways to spend the money in your FSA: with a special debit card and with your own money, which you will be reimbursed for. Let's dive into each option a little further. First, the debit card. You will be given a debit card to use at pharmacies like CVS, Walgreens, and even Walmart or Wegmans, and approved healthcare providers like doctors' offices, hospitals, and dentists. Simply swipe for the qualified expense and the vendor will receive money from your FSA account. If the information we receive from the swipe is sufficient, then your job is done. However, sometimes we at Beneflex-Erie need to review documentation to see if the transaction was for a qualified expense. Therefore, you may get an email or a letter from us asking for documentation related to a certain transaction, so always save the itemized bill. Also note that you can use your debit card from year to year. We simply load the correct amount of money onto your card at the beginning of each plan year, and we'll send a replacement card before your current one expires. Now let us dive into the other way of using your FSA funds. If you do not use the debit card for an expense, and end up paying for one using cash, your checking account, or a credit card, you can send us a reimbursement form and the related documentation by email, fax, mail, through our website, or through our mobile app. If we agree that it was a qualified expense, we will issue you a check for the amount you paid out of pocket. Throughout the year, you can track your FSA details online and through our mobile app. If you haven't created an online account yet, there are instructions in the enrollment packet that will guide you through the process. Once you have created an account, you can view your transactions, check your remaining balance, and print a statement of activity. You may also call Beneflex-Erie with any questions or concerns. We pride ourselves on giving excellent customer service, so when you call us, you speak with a real person. At the end of the plan year, the IRS requires that any unused funds revert back to the employer. This is known as the use it or lose it rule. So there is an element of risk in this product. However, your employer has generously enabled a grace period to minimize this risk, which means you have 2.5 months after the end of the plan year to spend the rest of the money in your account. When using your debit card throughout the year and during this grace period, it's important to remember a few key dates. The plan year is July 1, 2019 through June 30th, 2020. The grace period is 2.5 months, which means the plan year is extended to September 15, 2020. This means you can use your 2019 election to pay for services that were incurred between July 1, 2019 and September 15, 2020. The FSA operates on a service date basis, not a paid date basis. So please do not use your debit card after September 15, 2020 for services that were incurred before September 15, 2020, or else the debit card will erroneously take the money out of the 2020 account and you will have to pay back the plan. Instead, pay for those expenses out of pocket and send us a request for reimbursement. The runout period ends on September 30th, 2020, which means you can request reimbursements for services that were incurred during the plan year until September 30th, 2020. After that, we cannot accept any requests and any leftover funds will revert back to the employer. Funds do not roll over from year to year. One other thing to consider is that since you do not pay Social Security taxes on this money, it may reduce your Social Security benefit in the future. Now, let's dive into the Dependent Care Flexible Spending Account. A lot of the details and functionality are similar to the medical FSA, so we'll only go into detail on how the DCA differs from the FSA. Instead of saving money on medical expenses, the DCA is a plan where you don't pay taxes on qualified daycare expenses. Also, unlike a medical FSA, which is pre-funded, a DCA is payroll-based. This means that you elect an annual amount to be contributed to your DCA, and you can be reimbursed for expenses up to the amount that has been taken out of your paycheck to date. Also, the dependent care expenses must have been paid for and incurred in order to be reimbursed by your DCA. The maximum amount you may contribute to the dependent care reimbursement account is $5,000 for the year. There are a few exceptions. If your spouse is enrolled in a similar plan through their employer, the total amount you may claim for the year between both plans is $5,000. If you are married and filing a separate tax return, the maximum you may contribute is $2,500. Lastly, if you or your spouse earns less than $5,000 for the plan year, you are limited to the lower salary amount for deposit to the dependent care reimbursement account. To illustrate the benefits of participating in a DCA, let's walk through an example. Let's say you have a daycare that watches your 2-year-old child while you and your spouse are at work. Let's also assume that the daycare costs $300 a month or $3,600 a year. If you elect an annual DCA amount of $3,600 and get paid semi-monthly, $150 will be taken out of each paycheck and you will not pay taxes on this $150. After each month that the child goes to daycare, Beneflex-Erie will be able to reimburse you $300. If you are in the 22% federal tax bracket and live in Pennsylvania, you will have saved nearly $1,200 just by participating in the DCA. One other thing to note is that you cannot take the federal child care tax credit on expenses that were paid for using the DCA, but you can take the credit on incremental expenses. Therefore, you may wish to speak to an accountant or trusted advisor to calculate the best way to maximize one or both of these programs. Now that we have gone into detail about the two plans, let's summarize and identify the key takeaways. You don't pay taxes on your FSA and DCA funds. The plan year is, and therefore the allowable service dates are, July 1st, 2019 through September 15th, 2020, which equals a 12-month plan year plus 2.5 months grace period. You have until September 30th, 2020 to submit documentation for expenses that were incurred within the plan year. The FSA max is $2,700 and the DCA max is $5,000. Fill out the election form and return it to your HR department no later than June 12th. Create an online profile and download the Beneflex-Erie mobile app to have 24/7 insights into your accounts. Use your debit card and/or submit requests for reimbursement throughout the year. Find out which expenses the IRS considers acceptable with any one of these resources: the enrollment packet that we provide you at the beginning of each plan year, the cafeteria plan documents that your employer maintains, IRS Publication 502, and the FSAstore.com. If you ever need to contact us, here's our contact information. We have a local and toll-free phone number, and we have multiple ways that you can submit your claims. Through your online profile, via our mobile app, you can email us, fax us the claims, or even mail them to our address. Thank you for listening. Contact us with any questions, and enjoy saving money with your FSA and DCA.